Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Charles Dickson, who is CEO at Roadside Real Estate. Hi today, Charles.
Hi, Zak. How are you?
Very well. Obviously, presumably we were both quite pleased that your shares were up over 3x last year. And with the latest news, which has been bundled in with your AGM news, there's potential for further share price appreciation.
There is indeed, yes. So we inserted the share buyback into the AGM notice last week. Our AGM is scheduled for middle of June. We've already got shareholder support for it, but really it's on the back of all the Cambridge proceeds we've had in over the last 12 months, and expect further proceeds from that over the coming months as we continue to look to divest of the rest of our interest in Cambridge Sleep Sciences. So as part of that, we wanted to be able to reward our shareholders, but also and provide liquidity to them. So we now have the ability to buy back up to 10% of the company's ordinary share capital.
Well, as I was hinting, the shareholders have already been rewarded very well. Thank you. But
we like to continue to do that, Zak. We want to continue to reward shareholders.
Exactly. But in terms of just what's interesting there, apart from the fact that the share buyback was well hidden within the RNS announcement, but that's obviously keeps people on their toes. The other thing is that you've got the strategy, the stated strategy of the sort of the roadside developments. The clue is in the name. But what is the driver here? Is it that, or is it the other business that you have?
I think it's a bit of both. I mean, the roadside strategy continues to grow, and we now really have a solid business plan that we're looking to continue to grow this year. We've got a number of acquisitions that we've got lined up on the roadside side, and then on the Cambridge side, we continue to create value in Cambridge Sleep Sciences. The business is currently worth around £48 million now on our balance sheet, the remaining stake, and we're looking to turn that into cash over the coming months. So there's a great opportunity for the shareholders because essentially we're going to be sort of investing in a high growth area without having to dilute them. And I think looking at it as the biggest shareholder, I'm very pleased with what the company's managed to achieve, and particularly pleased with the share price performance over the last 18 months.
But is it the case, and this is maybe sort of hypothetical, maybe not totally relevant question, but you've got a sort of double-barreled approach with CSS and the roadside developments, but they could easily have been two different companies.
They could have, yeah. And at one point, a couple of years ago, we thought about making them two different companies, but it hasn't been necessary because Roadside's been able to turn its investment into CSS into cash, and because it's shares in another company, that's a very tax efficient thing to do. We've not had to pay tax on the gain that we've made. So I think absolutely right. It's been a two-barrel strategy, but we're now really focusing on one barrel as the second CSS barrel has turned into cash.
Right, and so you'll be doing your share buyback presumably over the course of the second half of the year. And is it really more of the same in terms of potentially new developments, real estate developments, and then updates on CSS?
Yeah, I think that's right. We're doing the share buyback second half of the year. We'll be doing some more real estate backed acquisitions. If you noticed our full year results back in Christmas time, we talked around operational real estate businesses, and that's definitely an area we focused in on over the last few months. So when we talk about roadside real estate now, we are really focusing about a lot of our time and resources in the operational element, so we can drive better returns for shareholders rather than just being a landlord. We think we can create more value and a better total return for shareholders by being an operational landlord.
And finally, perhaps just to which may or may not be relevant, we've obviously had a change of government in the last year. What is the lay of the land? Has that affected you, impacted you in any way, or is it actually a positive? It could be a positive, I suppose.
I don't think it's had a major impact. I think it's probably a positive for what we're trying to do. The government are very focused, almost fanatically on net zero at any cost. And we are well positioned as a business for that. I think the corporation tax rate is frustrating because it disincentivizes companies to invest. And then the increase in employers NI again is frustrating from a corporate perspective, but we don't have a lot of employees, so it hasn't impacted us. But it's frustrating from a corporate perspective and a growth perspective. I think every single business owner and manager in the country wants to see the country grow. But I think some of the policies that we've currently got are anti-growth.
Well, on that slightly mixed note, Charles Dickson, CEO at Roadside Real Estate, thank you very much indeed.
Thank you. Thanks, Zach.